So I actually had a little bit of a background in third-party loss mitigation. And back after the crash of '08, I was working for a mortgage bank that unfortunately was no longer originating loans, and we had to do something else to stay relevant within the industry. So we started helping folks out of foreclosure. And in that experience, we realized very quickly that if we were dealing with the same level 1 customer service representatives that everyone else was, we wouldn't have a business and they wouldn't have a home. So we fought our way to the top of, most of the majors. I had direct access to, executive offices at Wells Fargo, Chase. And so I think that learning experience as we came into as I came into the insurance restoration industry and understanding the servicing company's involvement with these checks, I knew that there had to be handholding even with them because they're going to fumble it, right? And so over the years, we have tracked all of them, thousands and thousands of transactions back and forth with these companies. Like I said before, we have their documents loaded into our system. So when the claim is open, so to speak, with whoever is servicing that loan, the insured doesn't have to wait a week for the documents to come out and then fill them out and send them back with the check. We have them already preloaded in our system. And now we're actually in discussions with 3 out of the 4 major servicing companies that handle these procedures for the mortgage companies. So there's there's only 4. So I'm even though I don't want to say their names, I'm sure you can figure it out. But it encompasses probably 70 to 80% or more of the volume on the mortgage side of the fence. So once we have the integrations directly with those entities, then if you could imagine, 80 to 90% of the mortgage companies that are out there would be capable of digitally endorsing the check on our platform so that we no longer have to send it off to them. But I think, more importantly, we understood that this was not a one-sided solution. There are, 4 legs to this table, and the mortgage companies, what they need, and understandably, they're looking out for their asset. They're, abiding by Fannie Mae and Freddie Mac and the GSE guidelines as to how they should be servicing these loans and how they need to be handling these claim checks. And at a certain threshold, it becomes riskier for them. And so they need to have a little bit more of a handle on it. So we understood that, and we have stayed aligned with that over the years, which helps us push things when it goes awry at the mortgage company, because in some cases we're almost telling them, no, this is outside of the traditional guidelines. Put me on with your manager. Being able to do that day in and day out is not something that any, roofer, restoration professional, PA, whoever it is, should be worried about. Everyone in this industry should be focused on their craft, not this, back and forth management of claim checks with the mortgage companies and all the guidelines that they have to adhere to. So knowing that balance between all stakeholders was key to putting this all together, for sure.
And it's funny you mentioned around 2016, 2017, when all of this started, because I remember when I first started, my first year, it wasn't a requirement to have the mortgage company on the check. And then after like year 2, year 3, all of a sudden everybody's like, hey, did you know they have to put the mortgage company on the check now? And we're like, okay. And then we didn't realize how much of a headache this was. And even to this day, fast forward now, 13 years or so, how do you get around, or do you not get around, the guidelines, the policies and procedures that they have in place? That when my client calls their mortgage company, they get some person who's sitting in a cubicle just going by these guidelines of, well, step 1, ma'am, you have to send the check over to us. Step 2, we'll send you the documentation that you need to fill out. Step 3, once we receive the documentation, we'll review the documentation. Step 4, once we review the documentation, we'll just release a third. Step 5, please send us proof of repairs. Or starting of repairs, then we'll release the second third. Step 6 or 7, wherever the hell I'm at, let us know when everything's been completed so that we can send somebody out to inspect the property before we release the final third. Yeah. I mean, that is just, it's a nightmare.
That's everybody's favorite, isn't it? The monitor claims. I mean, it's it's a real shit show. But
There it is. You were the first one. You cursed before I did.
I had to be first. But it's only because we're talking about monitored claims.
That makes you want to curse.
Well, yeah. And so maybe that is a very mild relay of frustration from our colleagues. Right. And so
it's bullshit.
Yeah, no, 100%. But again, we understand why the mortgage companies want to do that. If you remember back after Hurricane Katrina in 04 and 05, we had a slew of storms through the Southeast. Everyone remembers Katrina. And, when you have that many storms and then you're about to go into a recession or into a housing crisis.
Yep.
And people are getting total loss checks for $150,000, $225,000 with their name on it and their spouse's name on it, and nobody else looking at their destroyed home and that they couldn't afford anyway. What do you think they're going to do? Yep. They took off with the money. And so I think that was really the catalyst for a lot of those regulations to start happening from the
that makes sense
levels. Yeah.
I never really put those two things together. I mean, I knew the reason why people taking the money and run. I get it, but I didn't really put those things together. You've got all those hurricanes in 04 and 05 and then the Great Recession in 08. That makes perfect sense because I think I became a public adjuster in 09 and by 2010 it was there. Like every single freaking check had the mortgage company on it.
Yeah. And so whenever you get a loan or you refinance, your mortgage documents have a clause that state that they have to be included on any loss checks coming from your carrier. It's in your mortgagee clause in your policy. So, and I would, to that point, I would advise everybody that whenever you have a claim that you're representing an insured with, just ask them to double check who the mortgage company is on their policy. There's a lot of folks that have refinanced over the last couple of years. They're taking advantage of the rates. But the one thing I can assure you they're not thinking about is, hey, I better call my agent to update the mortgage company on my policy. So that way, if I have a loss to my home, they're not going to issue a check that needs to be reissued. Now, we all know the frustrations there, right? But and we'll get there where the check doesn't exist and we can fix that digitally. But until we get there, I implore everybody, it'll save you a lot of hassle. Just ask your insured, or if you have a copy of their policy, look at it for them. Say, hey, is this your mortgage company? And if it's not, tell them just call your agent, get this settled before we get your claim settled, or else we're going to get the runaround with that check.